don't sit on the sidelines and just wait for rates. If the deal makes sense, buy the deal. And worst case scenario, Christian, if rates go down 2 years from now significantly where it makes sense to refi, just go refi, right? So the in the news topic for this podcast for me is the fact that we've had interest rates going up being in the news for what? It seems like, I don't even know now, 6, 7, 8 months.
Long enough.
Yeah. Going all the way back to last year, pretty much around this time. And this is a topic that's been talked about a lot on podcasts and YouTube shows, but I kind of want to take your thoughts on it because, again, you're a mortgage lender, you're a mortgage brokerage owner. What are you seeing now? Number one, where do you think this is going to go? Are they going to hold steady? Right now, I think Forbes recently posted an article saying that the average residential rate is something like 6.46 or 6.6%. Where do you think they're going to go? Question number one. And number two, when it comes to investors and also hybrid investors, house hackers, is this something that they should be concerned about? Should they be waiting for the interest rates to drop? Or should they just go ahead and look at the fundamentals of the properties that they're looking at and go ahead and buy? What's your take on that?
I don't want to fall into the category of the lender who tells people that it's always a good time to buy, because I understand there's a lot of people who say that with the wrong intentions, right? Because they have to make a commission. I get that. However, if we just look at the fundamentals of what our economy is right now, I don't think any of us believe that inflation is actually 4%. Fair? There's no way. I don't think any of us believe that if rates dropped by 1.5%, there wouldn't be an absolute craze and a rush to buy real estate. Because all these people who are pre-approved at 7% would now have access to 5.5% rates, and now you qualify for $500,000. Now you qualify for $750,000. What I can say, this is from industry insider trading here, whatever. There is an astronomical amount of money waiting on the sidelines. I don't know what better way to put that. Just us, we're in the grand scheme of things a small brokerage, right? We don't compare to Chase, and I mean we have a good amount of people. We do great volume for an independent brokerage, right? Which we're not a bank, we're not a big credit union, we're not Chase or Wells Fargo or Bank of America. And we have over $2 billion in pre-approvals issued, right? Probably more than that now. That was of like 4 months ago. And the amount of people who have sat there and waited and who have said, I'll buy when rates are 5. I'll buy when rates are 5.5. I just don't see a scenario where if somebody's trying to time the market and wait for like their perfect entry point, I'm just waiting for prices to drop by 10% or 15%. I can tell you guys that I don't think the rates matter. And that's a really weird take. I get it. It's weird to hear. There is such a bigger benefit to buying real estate for someone like myself. I mean, I can save $400,000 a year in taxes buying real estate. I don't need a property to cash flow. I can cost seg and depreciate it and do everything else. And I can have a property to vacation in. I can have a location that I can go take my company to. I can Airbnb it when we're not there. And even if it breaks even or loses a little bit of money, like it's okay. And I don't want to like pitch myself as like this bad guy. Like I'm taking up all the housing, because in the grand scheme of things, investors own, I think like institutional investors made up like 3 or 4% of the buying pool last year, even though people make a big deal that BlackRock's buying everything.
Right.
But it's important to mention that not everybody buys for cash flow. And the only thing interest rates impact is cash flow. So yes, the house hackers who can't afford that mortgage payment. Yes, the investor that needs to cash flow $100 or $200 a month to make this make sense. Yes, it impacts those people. But if those prices drop by 10%, I go buy it. Somebody like David goes and buys it. Somebody like you goes and buys it. Somebody like the savvy realtor who realizes we just printed trillions of dollars. There's no way this asset's going to go down. Especially when you consider if prices drop a little bit, interest rates are going to drop. And if interest rates drop, it's going to rebound the price immediately. I think what's a more likely scenario is that a dollar is just going to become, I was thinking about this the other day. You remember like in like the 90s, like if somebody said they made 6 figures a year,
right?
It's like, holy shit, like
you're
killing it. Oh my God, how did you do that? What are you, a doctor? Like I remember growing up, I was like, 6 figures, you make $100,000.
Yeah.
And now it's like, you make one flip and you make 100. It's like
Right.
it's
Sure.
in money it was. That's the more likely scenario, is that prices are just going to keep going up. We're just going to lose our childhood value of money, right? Whereas a house on the end of the block that's $2.5 million, in 10 years, somebody's going to be saying, that's it.
Right.
Right. That's much more likely to me than rates impacting buying power. And your question was like, what do I see like the impact or maybe their direction they're going to have?
Yeah.
I don't think it's going to matter. That's really my answer. And it's such a weird thing to say, because how can interest rates not matter? I just think the desire of people to get their money into an asset overwhelms the impact that interest rates are having. I can tell you that we're processing hundreds of loans right now, and we are a small brokerage.
Right.
It's I'm saying it from experience. I'm seeing these people still buying when rates, and people are using non-QM loans. Rates are 8 to 9%. People are still,
Right. All right, guys. Well, you heard it here. Don't sit on the sidelines and just wait for rates. If the deal makes sense, buy the deal. And worst case scenario, Christian, if rates go down 2 years from now significantly where it makes sense to refi, just go refi, right? I mean,
that's right.
What's the harm? Yes, you'll pay a little bit more in closing costs, and I know some cynics here in the comments might say, "Oh, of course he's going to say that he's a mortgage broker. He's going to make money twice, whatever." But I think it's true regardless. And those people, by the way, I mean, that's a scarcity mindset. That's what you're just trying to pinch pennies as opposed to looking at the upside. Okay, do you? You know what I mean? If you want to do business that way, by all means. But I think the right way to do it is not to worry about things like that.